Imagine standing on a digital battlefield where every second costs a fortune. For decades, retail investors relied on intuition, but the game has changed fundamentally. Manual trading is no longer just slow, it is a mathematical liability in an era of high-frequency dominance. While you sleep, global markets digest petabytes of data that no human brain can process. Even traditional cloud-based AI tools are becoming bottlenecks, burdened by latency, subscription fees, and invasive data harvesting policies. This is the dawn of the local AI agent, a private wealth engine residing on your own hardware, shielded from the prying eyes of corporations. It is the ultimate evolution of. When you use centralized AI tools like ChatGPT or Claude for financial analysis, you are not the customer. Your data is the product. Every prompt you enter regarding your portfolio, risk tolerance, and strategy is vacuumed into a corporate cloud, potentially exposed to leaks or used to train models that trade against you. Furthermore, these platforms have strict guardrails and rate limits that throttle your potential during peak market volatility. By the time a cloud-based agent responds, the opportunity has often vanished into the ether. We are witnessing a critical shift where privacy equals profit. To reclaim your edge, you must disconnect from the central grid and build a fortress of intelligence that lives and breathes entirely on your. Building your local wealth engine begins with selecting the right brain. Open-source models like Llama 3, Mistral, and Phi 3 have achieved parity with many commercial giants, but they offer something more: complete autonomy. By utilizing tools like Ollama or LM Studio, you can host these massive neural networks on your own machine. This is not about simple chatbots. It is about creating a dedicated reasoning engine that can analyze balance sheets and macro trends without an internet connection. This local foundation ensures that your financial strategies remain your intellectual property. As you download these model weights, you are effectively installing a world-class quantitative analyst that works for zero salary, never. To run a sophisticated agent, you need raw power. The heart of the local AI wealth engine is the GPU, specifically its video RAM. For a fluid experience, a minimum of 12 to 24 gigabytes of VRAM is the gold standard, allowing you to run quantized 70B parameter models with startling speed. We are looking at hardware like the RTX 3090 or 4090, or the unified memory of Apple's M-series chips. This hardware acts as the furnace for your intelligence. Without it, your agent is a genius with a stutter. With it, your agent becomes a lightning-fast executioner. By localizing your compute, you eliminate the latency of the round trip to a distant data center, gaining milliseconds that translate. A brain is useless without senses. In the local setup, we utilize Python-based scripts to create a data pipeline that scrapes live sentiment from X, Reddit, and global news RSS feeds. Unlike central tools that have knowledge cutoffs, your local agent is fed a constant stream of real-time reality. Using libraries like Beautiful Soup or specialized APIs, we funnel this raw noise into a vector database like ChromaDB or Pinecone. This allows your agent to perform retrieval augmented generation, or RAG. It doesn't just guess, it references the exact news break from 30 seconds ago to determine if a market dip is a temporary glitch or a fundamental shift. You are essentially building a private, real-time Wikipedia for the global economy. The magic happens in the orchestration layer, using frameworks like LangChain or Crew AI. Here, you define the persona of your agent: the risk manager, the momentum hunter, or the contrarian. By chaining these roles together, you create a committee of AI experts that debate within your RAM. One agent identifies a trend, while another attempts to debunk it, ensuring that only the most robust signals reach your eyes. This multi-agent system mimics the structure of a top-tier hedge fund, but runs entirely on your local CPU cycles. You are no longer just a trader. You are the director of intelligence, overseeing a staff of tireless, silicon-based experts who never succumb to emotional fatigue or the fear of a market crash. How does text become wealth? Your local agent uses natural language processing to assign a sentiment score to every piece of incoming data. It can detect the subtle difference between guarded optimism and irrational exuberance in a CEO's tweet. By aggregating these scores across thousands of sources, your engine creates a heat map of market psychology. This isn't just counting keywords, it's understanding the nuance of human fear and greed. When sentiment score drops below a specific threshold, while the price remains high, your agent flags a divergence. This is the ultimate early warning system, allowing you to exit positions before the retail crowd even realizes something is wrong.
Let's examine a recent period of high-volume crypto volatility. It's 2 a.m., and a major exchange announces a sudden regulatory probe. The human trader is asleep, blissfully unaware as their portfolio begins to bleed. Meanwhile, the local AI agent running on a silent workstation detects the news within milliseconds. It cross-references the news with historical data and current liquidity levels. While the human would wake up to a 40% loss and panic sell at the bottom, the agent has already executed a pre-planned hedging strategy. It doesn't feel the adrenaline or the dread. It only sees a set of logical conditions that have been met.
In our case study, the local agent utilized a direct API connection to the exchange's matching engine. Because the agent is local, there are no browser delays or third-party platform lags. It placed a series of limit-if-touched orders that caught the exact bottom of the flash crash. While the cloud-based AI tools were experiencing high demand errors due to the surge in traffic, the local model remained rock steady. It processed the sentiment of the crash in real time, identifying that the fear was overblown. Instead of just protecting the portfolio, it flipped to a long position at the point of maximum pain. This maneuver alone resulted in a 12% gain in under 6 minutes, all while by the time the sun rose, the local agent had completed its cycle. Comparing the results, the manual portfolio was down 6% due to late reactions, while the AI-managed portfolio was up 14%. The key wasn't just speed, it was the elimination of cognitive bias. The agent didn't hope for a recovery, it calculated the probability of one. This case study demonstrates that wealth is no longer about who has the most money, but who has the best information processing loop. The local AI wealth engine turned a potential disaster into a significant profit event. This is the power of a sovereign intelligence that operates without the friction of human emotion or the limitations of centralized, subscription-based artificial intelligence platforms. Scaling this engine requires moving from a standard desktop to a headless, dedicated server setup. By utilizing Docker containers, you can ensure your AI environment is stable and isolated. A robust, uninterruptible power supply, UPS, and a redundant internet connection are the final pieces of the hardware puzzle. This allows your wealth engine to run 24/7, 365 days a year, with zero downtime. You can now monitor hundreds of assets simultaneously, a feat impossible for any human. The agent is now a silent partner, constantly scanning the global horizon for anomalies and opportunities. This is the foundation of true passive income, a machine that thinks, learns, and grows your net worth while you focus on. We are entering a new era of financial sovereignty. The tools that were once exclusive to Wall Street's elite are now available to anyone with a powerful GPU and the curiosity to build. The local AI wealth engine is more than just a trading bot. It is a declaration of independence from a centralized financial system. As models become more efficient and hardware more affordable, the gap between the individual and the institution will continue to shrink. You have the blueprints, the hardware is ready, and the market never stops moving. The only question remains, will you continue to be a spectator in the digital economy, or will you build the engine that drives your future? The age of the local agent is here.